Nation, what's up guys? Welcome back to the channel. Welcome back to another video as we continue our FXN trading group, TMM24. Welcome to week 3. Guys, so welcome again to Trading with Market Makers 2024, our free YouTube mentoring course. So as we get into week 3, guys, if you have not watched week 2 or week 1, please go back, check out the FXN Mentoring 2024 playlist so you can get caught up on this particular strategy. If you're new to the channel, my name is Mark and I've been trading since 2011, and I'm here to basically show you everything that I do for trading my strategy, and I'll be sharing with you every single detail. This is week number 3. So let's get right into it, guys. So this week, let's go ahead and start talking about the sessions. So Asian session is first. So let's get right into it with the Asian session. And first of all, what is the Asian session? So for us, Asian session is basically from 7 p.m. Eastern Standard Time to 4 a.m. Eastern Standard Time. Now, the segment of the session that we focus on primarily is going to be from 8 p.m. until 1 a.m. Eastern Standard Time. Now, why is this important? Well, simply the Asian box that we use is established from this time frame, so from 8 p.m. to 1 a.m. This also is making the initial high of the day and the initial low of the day. Pairs influenced by major news events during the Asian session should be excluded from trading that day. So meaning any kind of pairs that have major news happening throughout the Asian session, primarily influenced by this, will be NZD, AUD, and JPY pairs, as they dominantly trade during the Asian session. Obviously, trading during the Asian session is not part of our strategy. All right. The reason that we care about the Asian session is because it helps us identify the initial high and lows that are set by the markets at the very beginning of each day. London session. So what is the London session? Well, for us, it's 3 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. The segment of the session we focus on is primarily from 3 a.m. To 7 a.m. Eastern Standard Time. This is basically where the majority of the volume is going to come from. Now, the London box is also established, obviously, from 3 to 7 a.m. Now, making either the high of the day or the low of the day, depending on where price action goes. So the Asian session sets the initial high and low of the day, and then as soon as we get into the London session, then depending on whether price goes above or below the Asian session, that's obviously going to determine the high or low of the day. Out of all the Forex sessions, the London session sees the most significant volume. In this session, we only trade setups that are classified as type 1s through type 4s. This is the only thing that we're interested in trading when it comes to the London session, type 1s through type 4s, and we'll get into those here later on in this video. Now, talking about New York session, the New York session, obviously, what is it? Consists of the entire session of 8 a.m. through 5 p.m. Eastern Standard Time. The segment that we focus on is primarily 8 a.m. through noon or 12 p.m. Eastern Standard Time. The New York box is established from 8 to 12, and it's either going to do the opposite of what happened in London. So it's same thing. It's either going to make the high or the low of the day, depending on what happened in London. If London session creates the high of the day, then we should expect the low of the day to be created during the New York session, and vice versa. The US session ranks second in trading volume amongst all Forex sessions. So London is first, second via New York session. Most trade setups in New York will occur before 11 a.m. Eastern Standard Time. So when we get into the talking about New York session, as far as what trade setups specifically we look for during the New York session, it's very important to understand that most of the time, I would say over 90% of the time, most of the setups that we look for in the New York session will come before 11 a.m. Eastern Standard Time. Our strategy in the US session revolves around trading and seeking out either one of two things. It's either going to be continuation trades or reversal trade setups. That's it. Only two types of setups are the ones that we're going to focus in on during the New York session, whereas in London session, we have 4 options. New York reversal trade setups typically move to the 50 EMA and then consolidate for the remainder of the day. So basically when you have a New York reversal, let's say that makes a low of the day, it'll come back to the 50 EMA typically, and then the 50 EMA acts as a form of either resistance or support and basically just allow price to consolidate to end the session. In contrast, continuation trades bounce off the 50 EMA and move away from it. So the contrasting aspect is we're going to be using the 50 EMA during the New York session for either of the setups, and depending on how price action looks, obviously will determine which of the 2 setups are we going to trade. But the continuation trade, we found that bounces off as a way of confirming the continuation trade. We're going to go into all of this in this video so you'll know what we're talking about here. All right, guys, so let's talk about patterns and timing. Now, the strategy of patterns and timings that we use, our strategy involves 4 distinct patterns: type 1, 2, 3, and 4. The rules and characteristics of each pattern from type 1 to type 4 are distinct in nature. The timing for each pattern's formation is a crucial factor when looking at the setups to trade. Now let's talk about type 1 pattern. So type 1 pattern is a rapid move that extends beyond the Asian session's high or low. The move generally extends up to 50 pips from the high or the low of the Asian box. The focus is on identifying an M or a W formation after it breaks above or below the Asian session box. Ideal setups are found when the M or W pattern's apex has 5 or more candles. So meaning that between the first and second leg of the M or W pattern, the absolute best setups always have 5 or more candles between the first and second leg. Finally, the second leg of the M or W formation should occur in the London or New York box. So no matter what, the most important aspect of it is that the second leg is always going to be formed inside of a box. That's like a requirement. So what does the type 1 pattern look like? Well, here it is. Pound USD on a 15-minute chart. You can see the London session box here, and the W pattern that it's forming with, in this case, both the first and second leg inside of the London box. Now let's talk about type 2 patterns. Type 2 patterns is basically a move that fails to break past the top or bottom of the Asian range. Price action stays contained within the initial high of the day or initial low of the day boundaries. So basically it's not like it breaks out above or below the Asian range. It literally stays within the boundaries of that support and resistance area that's created by the initial high or the initial low of the day. The focus is on identifying an M or W formation. So just like type 1 patterns, we're still looking for an M or a W formation to form. Ideal setups are found when the M or W pattern's apex also has 5 or more candles between the first and second leg. So same rules as type 1 patterns. The second leg also of the M or W formation should occur in London or in New York box. Now for type 2 patterns, the majority of the time, I would say over 90%, are going to be, this is solely going to be pretty much a London based type of pattern. There are, about 10% of the time where you'll have what we like to call multi-session setups, where basically one leg is in the London box and the second leg is in the New York box. We'll talk about that all upcoming here. So here's what a type 2 pattern looks like. Basically, it's the only difference between a type 1 and a type 2 is basically where the M pattern is created. So in a type 2 pattern, the M is created, or the W is created within the context of the limits that are set by the initial Asian high of the day and low of the day. So let's talk about this other type 2 pattern that we have that we like to call a trade out of the edge, or we like to call it a toe. So type 2 toe pattern. What this basically is, it's a move that fails to break past the top or bottom of the Asian range. So just like a normal type 2 pattern. The difference of this one is that the initial leg of the pattern always develops inside of the Asian box. So meaning that the first leg is always created inside of the Asian session. Okay, that's why we call it a trade out of the edge, because the second leg is going to end up being created in the London session. So price action stays contained within the initial high of the day or initial low of the day boundaries, just like a normal type 2 pattern. We're still focusing in on identifying an M or W formation, and ideal setups still have the 5 or more candles between the first and second leg for the M or W pattern. The second leg of the M or W formation should occur in the first half of the London box. So what I mean by that is basically that in this type of trade setup, the second leg specifically is going to be created in the first half of the London session. So typically like before 5 a.m. Eastern Standard Time. So here's what a type 2 trade out of the edge looks like. You could see the first leg, how it's created inside of the Asian session, and then second leg is essentially created right at the very beginning of the London session. Type 3 patterns. So this is a move originating from the top or the bottom of the Asian range that hits resistance when it reaches the middle of the range. Expect the move to pin to the 50 EMA when it encounters the middle of the Asian range. So the 50 EMA is going to be used in this specific pattern because it allows us to really identify the majority of how these setups start to develop. Most, or I would say over 95% of the type 3 patterns that are the most successful that I trade have always had a 50 EMA that it bounces off alongside the middle of the range. You should be looking for a railroad track, a star pattern, or a cord of wood or cow formation in the middle of the range. While this pattern may result in an M or W formation, it usually only forms one leg patterns. So featuring of that one leg are railroad track, star patterns, or a cord of wood or cow. And then finally, these patterns are only observed in the London session. So type 3 setups only happen in the London session. And so here's what a type 3 pattern looks like. You can see coming out of the Asian session, we hit the bottom of the range, Asian range, and then immediately go back up to the middle of the range where that orange line is. That's the middle of the Asian range. It gets immediately rejected, and there you could see a 2-star doji star pattern there, and then immediately it gets rejected. Now, I didn't have the 50 EMA there, but the 50 EMA is actually there. And finally, type 4 patterns. Type 4 patterns is basically a forceful move emerging from the Asian range that breaches the top or the bottom boundary. This aggressive move resembles the start of a type 1 pattern. So the same type of aggressive move that starts the creation of a type 1 pattern is very similar to what we see here. Once the aggressive move occurs, we expect a retracement back to the Asian range stop or bottom. Typically, this pattern will form one leg, just one leg, featuring a railroad track star pattern at the bottom or the top of the Asian range. Also, these patterns are only observed during the London session. So what does it look like? It looks like this. So you could see the aggressive move coming out of the Asian session going into London, and then you see the retracement that happens. So a simple way to explain type 4 patterns is basically if you think about the context of how you would use, let's say, an Asian range as like support. The Asian range's initial high and low of the day, you can think of it as like support and resistance, and then basically a break and retest. You know how you have a break and retest strategy? This is very similar to that aspect, to where it breaks. In this case, it broke the top of the Asian range, the top of the Asian range being, let's say, the resistance, and then came back to retest that resistance and then kept going. So that's a very similar way to identify what a type 4 pattern is. We're just essentially using the Asian range is basically our guide to help us identify what type of pattern are we going to get, and it completely depends on the directional bias as well. So for example, for looking at this right here, this pound USD, because we have a type 4 pattern, that automatically lets me know that we're coming off a peak formation low. So we're looking for buy setups anyways. Okay. So this is why it's important to understand the directional bias that we talked about in the first 2 weeks. So then you can know in the next days, what you're going to be looking for, what patterns are more likely, to appear depending upon what directional bias you have. So if we're coming off a peak formation low, right, and we're looking for buys, and we see this aggressive move out of the Asian session going into London, well, the only pattern that we have, that we trade, that behaves this way if we're looking for buys is a type 4 pattern. Okay, we wouldn't be thinking about a type 1 pattern, because if a type 1 pattern would show this behavior, we'd be looking for sells. And in this case, we're not looking for sells, we're looking for buys. So the fact that price action immediately went through the top of the range aggressively, there's only one option for us to look for buy setups. That's going to be a type 4 pattern. Now let's talk about variations of the pattern. So this is basically different examples of different patterns that look very similar to each other, but also very different. So pound JPY 15-minute chart here is a type 2 pattern, right? So type 2W, you can see the first leg is created in right before the London session starts. The important thing is the second leg. Second leg is created inside of the London box. Okay, remember, it doesn't matter where the first leg is created for this. Okay, the first leg can be created anywhere. It could be created inside of the Asian session box, which is fine. That would be a type 2 trade out of the edge, right? In this case, it wasn't. It was just created on the outskirts of the beginning of the London box. But the important thing is the second leg is created inside of the London box. This one here is a type 2, but it's a trade out of the edge. So first leg is created at the very end of the Asian session box. Second leg, as you can see, created at the very beginning of the London box. And as you can see, of course, it's well before 5 o'clock a.m., 4:30 a.m. Eastern time. Now, an important factor about this is I want you guys to notice the second leg. Notice how the second leg is basically on top of or riding the bottom of the Asian range. This is perfectly fine. Okay, we wouldn't consider this a type 1 or anything, because the price action is still on top of the bottom of the Asian range. On type 1 setups, the price action clearly and aggressively breaks the bottom or the top of the Asian range. So it's a very distinct patterns that we're looking for here. This one here is a type 3 pattern on pound USD. You could see here that coming out of the Asian session, we immediately go down to the bottom of the Asian session and then go back up to the middle, retest it. There is a 50 EMA there as well that's just not showing. But then obviously gets rejected and then continues to go down. This is also a type 3 setup. You could see price coming out of the Asian session, hits the bottom of the Asian session low, and then goes back up to the middle, retest the middle of the range, gets rejected obviously, and then you keep going down. This one also is an example of a type 2 trade out of the edge. Again, you could see this one here had the first leg created very early in the London session, and then you could see immediately at the opening of the London session, you see the second leg being created and then immediately taking off. This here would be an example of a type 3 setup where we have coming out of the Asian session, you have the move up to the top of the range, and then immediately you get the retracement that goes back into the middle and then away. Also a type 3 setup, you could see coming out of the Asian session, price goes up to the top and then comes back down to the middle to retest. There's your railroad track and then you move away. Here is an example of a type 4 pattern where you had a clean break above the Asian range top and then immediately come back down to retest that same top, right? So the top of the Asian range here is basically resistance. So you break above it, come back and retest it, and then move away. This here is an example of a multi-session type 2 pattern where you have the first leg in the London box, and then second leg is created inside of the New York session. So this is a multi-session type 2 pattern where first and second legs are basically just created in different sessions. Here's another example of a type 4 pattern. Again, aggressive move out that moves strictly outside of the box here. The top half of that box is essentially, you could say, resistance, and then comes back, retests that same resistance area, and then takes off. Here's a type 1 pattern. You could see coming out of the Asian range, you clearly break above it, create the first leg that's outside of the London box, but the important thing is, again, the second leg is created inside of the London box, and then obviously you move away from it. This one also another example of a type 2 pattern where the first leg is created inside of the London session, second leg created in the New York session, but look at where the legs are created, the first and second leg, where they're riding on top of the Asian session, right? So very important that this is not a type 1, this is a type 2. Price action has not clearly broken out above the Asian range. It's sticking right there and it's hanging around the top of the Asian session, so top of the Asian range. So this would be a type 2 multi-session. This one here actually shows two different setups. So coming out of London, you could see we actually have a type 3 setup where price action comes out of the Asian range back into the middle, gives you a railroad track, and then immediately drops. And then going into the US session, you actually have a reversal, a multi-session reversal, where you have the first leg at the bottom of the London session, creating the low of the day. And then at the beginning of the US session, second leg is created, and then you reverse and go up. What you don't see on here is the 50 EMA is actually also bouncing off the middle of the range there, and then also stops price during the New York session at the reversal point there. Here's another example of a type 3 pattern. You can see price action comes from the middle of the range out to the bottom, and then retraces back up to the middle, gives you a railroad track, and then immediately drops. So we have, let's say, our Asian session, right? That's the beginning of the day, let's say. And then we have our Asian box, right? This is our Asian box here. And then we have price action, right? Going back and forth, creating the initial high and the initial low of the day is created right here within this Asian box. Okay. Now let's say that this is going to be a type 1 W, right? Market makers are going to run this down. We're going to go below the Asian range. Okay, we're going to create the first leg, and then we're going to start to work on basically creating the apex. The apex is essentially this middle part here that creates this. Okay, now this is the part that we want to have more than 5 candles between the first and the second leg. So we want this to be at least 5 candles or more. Now, there are going to be different variations of type 1 patterns. Okay, there may be a pattern that looks like this. Let me just show it to you real quick. There's going to be a variation that may look like this, where you have the second leg goes deeper than the first. There's also going to be a variation of the pattern where you might have the second leg be above the first, like this. It doesn't happen a lot, but it will happen. And those are still valid type 1 patterns. Okay? But just understand that those are there and those are still valid patterns. All right? So remember that you want to have this. Let's say this is our London box. Okay? We want to have the W pattern happen inside of that box. There's also going to be a variation where, let's say if this is the New York box, you're going to have the W pattern that looks like this, right? And this is what I showed you earlier, which is basically going to be a multi-session W, where the first leg is in the London box and the second leg is going to be in the New York box. The same thing basically happens for a buy. The same exact thing happens for a buy. Market makers go up and they can go ahead and start to create the apex, right, of the M. And same criteria for this one also, where we would want it to be inside of the London box. Okay, we want it to be inside of the London box. So like this, the same thing. We could also have those same variations happen here as well, where we could have basically the first leg here and then the second leg come over here, and this is basically where the New York session box is. Okay, so the first leg will be in London, second leg will be in New York. And those will be very obvious when you see them. Okay. So those are the different types of variations of the type 1 pattern that we're looking for. Again, you could have a variation like this, where it's just a regular M, right? You could have a variation where the second leg goes higher. You could have a variation where the second leg is shorter. Okay? Most of the time, you're going to get this. Sometimes you'll get this. Not a lot of times will you get this. Okay? So that's how common they are. Now, when these type 1s are being created, there's a couple things that I want you guys to notice. I want you to notice the rise or the push up that happens, right? And as soon as that push up stops and comes back down again, that typically is the indication that that's your first leg. All right. Now, the second leg is really important because we can tell when the second leg is happening, essentially, because the second leg will basically go back up to re-tag that same high like you see here. Okay? And that's what basically forms that M formation here that you see like this. All right. So very important that you realize when price action literally just stops. Think of it like a car driving down the highway at 80 miles per hour, and then all of a sudden it just stops. You got to ask yourself, why did it just stop? Why not keep going? Right? There's a reason why it stops, because they don't want to go past that high. Okay? And then they come back down again. Once they start coming back down again, you're like, okay, here's a possibility for the first leg to appear. And then essentially now you're just waiting for a retest of that same high. Okay? And then from there, go down. All right, so let's get into the type 2 patterns. So like I said, we have our Asian range. Okay? That's our Asian range there. Remember that the Asian range is from essentially 8 p.m. To 1 a.m. And this is all Eastern Standard Time. Okay? That's the Asian range, right? The Asian range also sets the initial high of the day. So the HOD. So that would be here, right? The initial high of the day. And then down here, it would set the low of the day, the initial low of the day, right? So there's our Asian session from 8 to 1 a.m. sets the initial high and the low of the day. Now, let's extend out the top half of the Asian session, and let's extend out the bottom half of the Asian session so we can know where exactly the session is. So here's what we end up essentially getting is we have price action, right, moving back and forth like this, setting the initial high and low of the day. And then what ends up happening is price action comes out of the Asian session and then comes straight to, in this case, we're going to create a W, comes straight out to the bottom of the range, basically creates the W pattern, and then we go from there. Okay. Now, while this is going on, obviously the actual London box, let's say, would be right here. Let's say this right here would be the London box, and that essentially would be your type 2 pattern that we're looking for. Remember that the type 1 pattern, right? The type 1 pattern breaks through the Asian low, while the type 2 pattern does not break the Asian low. It goes directly to the bottom or to the top. Okay, that's the main difference between the type 1 and the type 2 pattern, is where do they end up going to? We know that the type 1 pattern ends up going past the Asian session, while the type 2 pattern does not. It literally goes to the bottom or to the top. So with that being said, if we were looking, let's say, for a type 2 that was a sell, okay, so for an M, right, let's say that this is the London box here, same scenario, okay, what we're going to end up getting here is we're going to end up getting this scenario here where we would basically have price action come out of the Asian session and then come right to the top of the Asian range, create the M formation, and then it would do something like this. Okay, that would be the same scenario if we were selling. All right. Now, the trade out of the edge is basically like this. So the trade out of the edge, what it looks like is it looks like this. This is what it looks like. You have the first leg in Asia, second leg is in the London session. It doesn't, this is the only time that it happens, right? Is the second leg is only in London. This does not happen with the second leg is in like the US box. This only happens in the actual London session. Primarily, this second leg, okay, the second leg of the trade of a trade out of the edge is going to end up being on a specific time frame. Okay. The second leg is essentially going to be before, this happens before 4:30 a.m. Okay. So the second leg of a trade out of the edge will happen before 4:30. That's the whole point of the trade out of the edge, because the second leg is already forming, and you have this happening super early in the session. So very important rule when we talk about trade out of the edge specifically is that we found that the best trade out of the edge patterns develop before 4:30 on the second leg. Okay, and this works obviously for either way, for selling or buying. Okay, the reason that type 2 patterns are created is because market makers have no need of grabbing orders that are at the top here. Let's just say in this scenario where we're looking for selling, market makers aren't interested in grabbing any orders that are up here because they already have enough orders. So what they do, okay, is they produce a type 2 pattern, all right? So they don't have to grab orders right here. They don't have to grab it. They will save all these orders here, they'll save them for a future event, okay? So type 2 patterns aren't grabbing orders like a type 1 pattern, right? So type 1 patterns would ultimately go down here and start grabbing, orders that are all down here. Sell stop orders, stop losses, all of that, right? It'll start grabbing all the orders down here. That's why the move is intentional, okay? It allows market makers to grab orders, but also go ahead and get traders, retail traders, to think a breakout is happening. Okay, we're not doing that on a type 2 pattern. The reason type 2 patterns happens and why they get stuck, you will see them. They will literally get stuck here. Okay, it's like hitting a brick wall. They'll get stuck here because they don't want to go up here and take out any of these orders. They want to save them for later, for when they actually need them. Okay. So please understand the concept of why a type 2 pattern happens. All right. So this is type 2 patterns. Most of the type 2 pattern, guys, that we have found happen in the London session. Okay. So I would say 85% of the time, a type 2 pattern happens in the London session. Okay. There's going to be a small percentage of times where you get a multi-session type 2 pattern, okay, where essentially you would have basically the first and second leg like this. So let's say that this would be the New York box, right? And so the pattern, let's say if we're selling, it would be something to this effect here. So like this. So it'd be like this, like that. Okay. Very rarely are you going to get this pattern. Most of the time, 85% of the time, you're going to get the pattern that I just showed you, which is in the London box. About 15% of the time, you're going to get this right here, this multi-session. Okay. The only reason, there's a couple reasons why you would get a multi-session type 2 pattern. The first one would be if market makers are consolidating price in order to wait for a news event in the US session to help them with liquidity. Okay, so if there's a big news event, all right, happening during the US session, like FOMC or NFP or something like that, and they don't want to use, they don't want to use the liquidity, beforehand, they're gonna wait and spread this out, and it'll be, like this, just consolidating very tightly, and then all of a sudden you get this, and then boom, the news event will crash, will cause, this to happen, because the whole time, all they've been doing is just collecting orders. Okay, and they use the news event to go ahead and release everything at once. Okay, so typically that's what leads to having a multi-session type 2 pattern. All right, so let me go ahead and show you now on charts examples of type 2 patterns and how they develop. All right, guys, so here we have, we're sitting on Euro USD 15-minute chart, and here we have the first one that I want to show you. This right here is a trade out of the edge. All right, so here's the pattern right here. The first leg is in Asia, and then you have the apex, and then boom. This right here is an example of a trade out of the edge. See how the first leg here is in the Asian box, second leg right at the beginning of the London session, second leg. Plenty of candles between the first and the second leg, and of course price action is basically stuck at the top. Okay, so this right here would be an example of a trade out of the edge, a good example. All right, this is what they look like. Let's take a look at another one. All right, I want to show you this example here because I want to make sure crystal clear that we don't run into this. This right here, some of you might see as a trade out of the edge, right? You might see this as a W pattern, and it is a W pattern, but there's a problem with it. The problem with it is that the second leg is in between the Asian box and the London box, right? So this is not a trade for us. Okay, this is not a trade. This is not a type 2 trade out of the edge. All right, because this second leg is not inside of the box for London. All right, so I just want to point that out to you guys so you guys can understand and see that this is not a trade setup. Okay, this would be a trade or move that we would not trade and we would miss. Okay. All right, so here's an example of another type 2 pattern where we have essentially the first leg coming down. This is the first leg here, goes up and then comes down, gives you a second leg right here, and then obviously takes off. Okay, so this would be another example of a type 2 pattern. Look at how it's pinning to the bottom of the range here. Now, this W here would be an example of this type of W, right? Where you have the first half of the first leg actually not completely touching the bottom. Okay, these are variations that you're going to see. Okay, so these are going to be very different variations that you're going to see. The one that we want to see all the time, but obviously we're not going to see it, is one where both legs are touching the bottom of the actual range. Okay, those are the ones that we actually do want. Okay, those are ones that are going to be like for us like perfect, right? But we're not going to always see perfect patterns. All right, so this is going to be one where you would have basically the first leg short and the second leg long. Okay, now here's an example of a type 2 pattern that people could look at two different ways. Some people might look at this pattern as a trade out of the edge like this. Others might look at this pattern as this instead. So which one's the right pattern out of the two? For me, the right pattern is going to be this one, because if you would have taken the trade out of the edge, right, you would have probably gotten, called out on right here on the pullback. Okay, there's entry rules and stuff that we're going to talk about, but this would have been a break-even trade or a trade that you would have exited because of this pullback. But the right pattern for me is this particular one like this, where you have the second leg is lowered. The second leg really just barely didn't touch the top of the Asian range. Why is that? Why did this not touch it? The reason is because when this move was done here, okay, this right here, that little wick, this little wick actually extends out probably another maybe 10 pips or so because of the spread. So it's really actually reaching all the way up here. Okay. So this right here grabbed orders that were here. And so when it came back up again, market makers didn't want to come back up here. Because if they came back up here, basically all of the people that they just trapped, they were able to basically release them on break-even trades. Okay, so in order to prevent that from happening, essentially they don't do that and they just go straight down. All right, I want to show you this example here because I want to make sure that you don't see this as a type 2 pattern. Okay, this chart right here, there is no pattern at all for me to trade. None whatsoever. Okay, do you see all of these wicks on either side? Okay, whenever you see that kind of behavior, like, I just leave that alone. I don't want to be anywhere in this type of behavior. When you see all these dojis like this, when you see that kind of stuff, like, honestly, get away from that pair. That pair is not going to do anything that you want to do. Okay, so please make sure that when you're looking at setups, we want the best possible setups. When you send me the examples, I want the best examples. All right, and the whole point about this of why I want the best examples is because I want you to know what the best examples are, right? And what are the best trade setups that they look like, okay? Because you'll start to realize that, yeah, you know what? These don't happen every day. The trades that we're looking for, they don't happen every day. And that's the point. All right, so here's another example of one that's a bad example of a type 2 that some of you might think is a type 2. Okay, this is not a type 2. There's nothing here for us to trade. Okay, again, the same type of behavior, you know, a bunch of spikes, wicks all over the place. Okay, a bunch of it. Stay away from it. All right, stay away from this kind of stuff, please. This is not a setup. This is nothing here. All right, so here's an example of another type 2 pattern. The pattern itself is this right here would be the first leg, and this right here would be the second leg. So the pattern is basically like this. Okay. Notice how both legs are literally stuck at the very top of the Asian range. Okay. So what makes this, I think it's important to start to notate that whenever you see a move up like this, and then you start to see two candles starting to come back down again, right, to start the retracement, that's when you know that that's very likely the first leg. Okay, so you see how this move keeps going, and then you start to get two red candles, and then you see this candle here this candle here starts actually as a solid red candle going down, and then it comes back up again. Okay, so very important to understand when the first leg starts. It starts whenever you see the momentum stop, and it just so happens to stop at the top of the range. Okay, and then all of a sudden you start to get two legs, two red candles. That's when you know very likely that that's probably going to be the actual first leg printing out. All right, here's an example of another type 2 pattern. We have this almost turned out to be a trade out of the edge, but it's not. Here's the first leg here. Second leg is right here. Notice again how price action gets stuck at the top of the range. Okay, so here's where you would have what I was telling you earlier, where you'd have just a straight move up, and then you start to hit a brick wall at the top, and then you start to get two red candles together in a row. When you get that moment, that's very likely going to be your first leg. And so in this case, obviously it is, and then we start to create the type 2 pattern. Here is a more traditional type 2 pattern where you would have first leg is right here, comes up, comes back down, and then boom. There's your type 2 pattern. Same thing. Hits a wall at the bottom of the Asian range. Some people might actually see this, which is fine. I get it. But typically, you don't get a first leg super early like this. This is still like the previous day. So the real pattern that I would be looking at is this right here. Okay. I want to share this one here with you just because I want everyone to see. This is not a type 2 pattern. This is not a type 2 pattern. This is nothing. We would not trade any of this stuff. All right. So please do not think that this, or be fooled that this is a type 2 pattern. It's not. It is nothing at all. All right. This one right here is a type 2 pattern. This is a trade out of the edge pattern. As you can see, the first leg is here, and then we go up right to the very top here, and then boom, come back down again. This is an example of this type of an M here. You're going to notice that sometimes price action or the candles are literally on top of the line. This is completely fine, and that is okay. All right. There's going to be, again, variations on the pattern. This is one of those variations. So if you see price action that does this and the candles are literally on top of the line or on the bottom of the line, same thing. This is still a good pattern because it's still stopping at the top or at the bottom of the Asian range. That's the most important thing I need you guys to understand, is that price action stops at the top or the bottom. Okay. Is it going to do something like this? Yes, you see it right here. Okay, so this is a good example of a type 2 trade out of the edge, but also where you see the candles themselves are literally like on top of the line. Okay, it's not always going to be perfect, but I want you guys to know that this is going to happen, but this is completely fine as a pattern. Here's another example. We have price action coming down. We have the first leg right here, goes up, starts to create the apex, comes down, touches the bottom or wicks down to the bottom of the range, and then takes off. So this right here is another example of a good type 2 pattern. This one happened to be a W pattern. But notice, again, the same similarities that I keep saying. Price action comes, stops. You start to get, in this case, 2 blue candles. That's when you very likely are going to get the first leg. And then you have way more than 5 candles for the apex of the actual pattern itself. So good W type 2 pattern here. Here's another pattern. another type 2 pattern. You could see essentially the first leg is here, second leg gets built out and then goes. You could see essentially how this one here is pinning multiple times, again, to the bottom of the range. The second leg, as you can see, is essentially right on top of the line. Okay, so again, still a good pattern. Here's the pattern itself. There's a type 2 right there, W pattern. All right, I want to show you guys this example specifically because I don't want you to be fooled by this. Okay, do you see this this move right here, this wick? You know what that wick is? This wick is basically news. Okay, so I know that it may look like this, but it's not. For me, it's not. This would not be a type 2 pattern, even though this wicked up, because typically you're not going to have an entry all the way down here is the problem of why this is not a pattern. And we're going to get into entries in a different video, but I want you guys to understand that this is not a good example of a type 2 pattern. So I know that I'll probably get, you know, something like this from one of you guys, I don't know, but this is not a type 2 pattern. Okay, so please keep that in mind. We want candles, not wicks. Candles to be up here. Okay. All right, here's another type 2 pattern. This one's a little bit differently. I want you guys to notice the first leg comes down. This first leg comes down. Here's your apex. And then the second leg here has a bunch of stuff going on here. Okay. But we're going to get into this specific with the entry part of we're going to get into this when we get to entries, because there's certain ways that you can enter this, but I want you guys to know that this is a type 2 pattern. Okay, even though it's got a bunch of stuff down here. Okay, so there is definitely going to be an entry here that we can get in on this, and we're gonna you know, go over that in the entries video. But this right here is a type 2 pattern. Again, same thing, same theme over again. We have price action literally stopping at the bottom and sometimes even wicking multiple times through the bottom of the range. This is still a type 2 pattern. All right. So a couple things that I want to make sure that you're aware. There's a lot of stuff on this whiteboard right now, so let's go ahead and break this down. The first thing is this. So this right here, okay, this right here is a railroad track. All a railroad track is, guys, is basically two candles of the same size next to each other. That's it. Okay. Now, in the context of a type 3 pattern, right, this is the Asian session, right? Here's the Asian session. Price is moving across like this. And then we have price coming out of the Asian session, going into the middle, that gets stuck and then moves away. Here, in this part here, is where we want to see this. All right. Now, as far as the context of it being a buy setup specifically, okay, we want to see a red candle first and a green candle second. Now, when it comes to the rules of what is a good railroad track versus what's not a good railroad track, okay? So in that context, all right, all we want is we want to make sure that the second that this right here, that this candle, okay, this candle has to cover 75% or more of the previous candle, of this candle. So it might look like this. So it might look like that, a variation of that. That's the important part, is to make sure that 75% of the second candle, not the first, but the second candle, covers the first. So you're going to see that there are going to be railroad tracks that are not perfect like this. Most of the time, they're pretty close to this. Okay, but there's going to be some times where it's not perfect, but this is the requirement for the non-perfect version of the railroad track. That's what's required. Let's talk about the other pattern. So this right here is your traditional, typical star pattern. All a star pattern is, guys, is basically like a railroad track like this, but with a little doji in the middle. A little candle that looks like this in the middle. Now, the candle in the middle, this candle here, the color of it doesn't matter. It could be red or green. It doesn't matter. The important thing is the same thing as we talked about in the railroad track. In a buying situation, okay, so if we're doing this for buys, the first candle of the railroad track obviously has to be a red candle. The second has to be a green. Right? In the context of the star pattern, it's the same thing. The first candle has to be red. The middle candle can be any color it wants to. It doesn't matter. It could be purple. It doesn't matter. And then the second candle after that, the big candle that covers it, has to be green, obviously. Okay? The same rules, by the way, apply to the variations of the star pattern as well, where essentially the second leg, this leg here, has to be at least 75% of this one. Okay? So it's got to be 75% or more, the body. So very important. The same rules apply, essentially, to this. So just keep that in mind. 75%. And the same thing in a buying situation, this is what it would look like, the star pattern. Now, there's going to be different variations of the star pattern. You're going to see star patterns that look like this. Okay? You're going to have 3, or they may have 2. Okay? It doesn't matter. It doesn't matter the number in the middle. Okay? What matters is that you have a big candle, a big engulfing candle, followed by 3, 2, 1 little one, and then followed by another big engulfing candle. That's it. That's all the star pattern is, guys. Okay? Now, this one down here, this is a cord of wood, or what we call a cow. Okay? Cord of wood. Cord of wood. All right? All it is essentially 2 railroad tracks stacked next to each other. Right? You see the railroad track here, right? All this is basically 2 of them next to each other. That's it. That's all a cord of wood is. Okay? Now, the importance of a cord of wood, this doesn't happen very often, by the way. The cord of wood does not happen very often. But if you see a cord of wood, if you switch to a line chart, okay, you will basically see this on a line chart. So a cord of wood basically makes a W on a line chart. As far as rules for a cord of wood, there is only one version of the cord of wood, guys. It's just literally this: 4 equal stacked candles next to each other. Obviously, red, green, red, green. If you're in a buying situation, this is the color combination. That's the color combination. Now, if we were doing, let's say we're doing a selling and not, let's say we're doing selling and we're not buying, right? So let's say it looks more like this and it's like this, right? That's what a type 3 would look like. Okay, right here, same rules apply. We'll be looking for railroad track, star pattern, or cord of wood. The only difference is that the colors would essentially change or invert, right? So if we're looking for a sell, okay, the first candle, if we're looking for a sell, would obviously be green because you're moving up, right? You're moving up. So the first candle would be green. The second candle would be the red. Okay? So it's the same thing, just literally inverted colors. It'd be the same thing, just in inverted colors. So what you'd be looking for on a star pattern, star patterns would be basically be the opposite, right? So the star pattern would look like, right, same concept, just inverted. So obviously this would be green, and then the other one would be red, a red candle. Same concept. We don't care what colors these are in the middle. It doesn't matter. Okay, but if we're looking for a selling situation, it's going to be green because going up, right? Price is rising, right? So you're going to have a green candle, and then you're going to have the dojis in the middle, whether it's 1, 3, 2, it doesn't matter. And then obviously you're going to have this right here. For the quarter wood, it's essentially going to be the same, right? It's going to be green because you're going up, and then you're going to have red candles after that, right? So it's going to be red candles and then red candles. It's going to be the same thing. And so the colors are essentially just inverted. There is going to be a variation that you might run into, okay, that's going to basically look, it's going to look like this. I need you guys to pay really closely attention to this. There's going to be a type, there's going to be this that's going to happen. Watch. It's going to be like this. Price action is going to come out of the middle like this and then do that. This is not a type 3 pattern. Let me repeat that again. This is not a type 3 pattern. When price action is coming out of the middle of the range like this, okay, and then it just shoots up or shoots down, doesn't matter. That's not a type 3 pattern. So please, please, please do not think, because I see this every single time, this is, I can't repeat it, this is not a type 3 pattern just because it's out of the middle. So here's a variation of that that would be considered a type 3 pattern, which is this. Price is coming along, and then let's say it starts to come out of the middle of the range like this, but then it goes to the top, back to the middle, and then goes. That would be a good type 3 pattern for a buy. Okay, the important part that I want you to understand about this is this, the fact that this particular variation is coming out of the middle of the range, okay, but then it goes to the top and comes back down and gets rejected. What makes it a good type 3 pattern, even though it came out of the middle, is the fact that it went to the top and then came to the middle to get rejected. Okay? It did not just come out of the middle and then fly. That's not what we want. Okay? So the same scenario essentially could be said for, a selling variation of this. Same thing could be said for, for selling variation of this, right? Here's your Asian session, you're doing this, and then it starts to do this in the middle, and it comes out of the middle, and it goes down, comes back up, and then it goes. This is a good sell pattern for a type 3, even though it came out of the middle of the range. Why? Because it tagged the bottom first, and then it came back to the middle of the range. Again, type 3 patterns, they come from either the top or the bottom. They never start life from, they never come from the middle. Those are railroad tracks, star patterns, and quarter woods. That's all they are, guys. Very, very simple. Okay? Very, very simple. Railroad tracks are just two big engulfing candles that are next to each other. Star patterns are literally just an engulfing candle followed by a little baby one followed by another engulfing candle. So this is what we're looking for on type 3 patterns. That's the breakdown of type 3 patterns. That's why in all the examples, you see the same thing over and over and over again. You see one-legged patterns. You'll see star patterns here. You'll see railroad tracks here. You know, same thing over and over and over again. That's what we want. Those are the type 3 patterns that we want. Are there going to be patterns, right, that do this, that don't give you railroad tracks or quarter woods or star patterns? Yes, there is. And there's a way to enter those, which we'll get to in the entry video. Okay? But I just want you, again, these videos that I want you to first concentrate on is just strictly the pattern. We're not talking about directional bias or any of that stuff. We're going to get to all that stuff. I just need you to understand what is a good pattern versus what's a bad one. That's it. Once you understand the difference, then we can start to pick out the really good patterns that you're actually going to trade. Here we have the Asian range, right? Price is moving across like this, and you'll get a move like that, a super aggressive move. From all of the examples that I have seen of type 4s, okay, the one theme that happens to be that I've seen over and over and over again on the type 4s that end up working out in a huge way is just this aspect right here. The super aggressive move that happens coming out of Asia. Okay? Here's the bottom of the range, and then it's like a gravitational pull. It comes right back to the bottom of the range, and right here, same thing. If this is a selling scenario, we're looking for same thing, railroad tracks, right? We're looking for star patterns or even a cord of wood. That's it. That's all we're looking for, guys. One of these things here. So essentially, very similar rules to a type 3. It's just where does it get stuck at? That's really the main difference, guys. Is where does it get stuck at? Okay? And so if we're selling, obviously, then we're looking for this. This is how it would look, or how the candles would be colored, I should say. Again, for the star pattern, the middle candle, this candle here, it doesn't matter what color it is. Okay? But this is what we want. We're looking for railroad tracks, star patterns, or quarter woods here. That's going to be the ideal setup that you want. Are you always going to get star patterns, quarter woods, railroad tracks? No. But that's the ideal pattern that we want here, just like a type 3. Okay? There's going to be ways that I'm going to show you how to enter these trades, how to enter this when it doesn't give you railroad track, star pattern, or quarter wood. Okay? We're going to talk about that in the entry video. All right? But this is all that a type 4 is, guys. It's just an aggressive move coming out of Asia that's gravitational pulled right back to the bottom of the range. In this case, for a sell. Okay? If it was a buy, it'd be the same thing, but just literally opposite. That's it. Same thing, but opposite. So it would be, you know, something like this. Let's pull out. There's the top of the Asian range there. And it'd be something like this. Same thing. Right? Here, we want railroad tracks, star pattern, or quarter wood. That's it. That's all we want out of here in the ideal scenarios. If you can have a 50 EMA or a 200, if you can have any of the EMAs be right here meeting it, because the EMAs are going to act as a form of support or resistance at that particular point. Okay? They basically act as a barrier here. That's even better. That's why on type 3 patterns, we want the 50 to be there. Because every single time that we've seen the 50 there with, you know, on a type 3 with the railroad track, star pattern, or a quarter wood, forget it, it's done. And it's going in our directional bias. It's very, very accurate. Okay, so it's the same thing with the type 4. So the differences in all of the different patterns, guys, is where the pattern stops and it makes the actual pattern, right? So let's do a quick review. So let's do with the a type 1 first, even though we've already taken type 1s, right? So I'm gonna show you all sell, let's say sell only patterns, right? For now. So type 1 pattern would look like this. A type 2 pattern, that's a sell, would look like this. A type 3 pattern, that's a sell, would look like this. Okay, that's the top of the range. And then a type 4 pattern, that's a sell, would look like this. Okay, that's it. Those are all the different patterns. Those are the 4 patterns if you were looking for sells. What's the difference in the patterns? What's the difference between a type 1 and a type 2? The difference between a type 1 and a type 2 is where does the type 1 go? The type 1 blows right through the top of the range, right, to create the M. The type 2s don't need to do that. They literally go right to the top and get rejected to create the M. Type 3s, what happens with type 3s? Type 3s come, in this case, because it's a sell, they come from the bottom and they stop in the middle of the range. And then they sell off. Type 4s, if it's a sell, it goes right through the bottom of the range like it wasn't even there, but it comes right back up and it's gravitation, like it's gravity pulling it right back to the bottom of the range, and then it goes. The difference is how the patterns are created. That's it. So this is type 1. That's a type 2, type 3, and a type 4. That's it. The same things, type 3s, happen in London sessions. So you want this to be obviously in the London box. We know that type 1s and type 2s, as long as the second leg is either in the London box or the New York box. That's all we care about when it comes to these two. These two down here are London only, okay? London only. These two up here, type 1, type 2, can happen in London and New York, because we know we could have a multi-session scenario where we have one leg of a type 1 in London, another leg in the New York session. Okay? Type 2, same scenario. In type 1s and in type 2s, as long as the second leg is built in either the London box or the New York box, that's all that matters. So those are the 4 patterns that we're going to trade. Those are the 4 patterns that we're going to focus on. All right, guys. So that is week 3 for TMM24. I hope you guys enjoyed this particular video. I hope it brought you some clear insights as to what the strategy is that I trade, what specific patterns are the ones that I'm looking for. If you have any questions, guys, about any of this, give me a comment below. Let me know what your questions are, and obviously I'll be more than happy to answer your questions. Guys, until the next week, have a good one. Enjoy the week of trading.